Hey, everybody. How you doing? Welcome back to the afternoon show here. It's 3 o'clock Eastern time. It's your buddy, Uncle Bruce. Welcome to Stock Markets with Bruce. We're going to try to cover the last hour of this market in plain English. It is April the 6th, Wednesday, and we've got a recovering market happening here. We found that the Feds released their they released their minutes, and then right after they released their minutes, the markets went down dramatically. The Dow was off 350 points. Then it turned around. The Dow is now only down 52 points. It's really had a real comeback in the last 30 minutes. Over on the S&P 500, we're down 25 points, and on the NASDAQ, we're now down 215. And at one point, I think NASDAQ was down to 13,793. It's now 13,009, almost 993. We've had like a $200 recovery on NASDAQ. So we were down 415 points. Now we're down 215 points. Interesting. Biden extended the student loan pause again until the end of August. So that you know what that means. That means it's going to be extended again till the end of December because he's going to get through the midterms on this. He's going to make this a political handout. That's my hunch. I could be wrong, but you tell me if I'm wrong or not. But I did a poll question here a few minutes ago. It's 3 minutes old, this poll question. The question is, would the U.S. economy heat up if all federal student loan debt was canceled? So if the federal government paid off all student loans on behalf of all student indebtors, would that create a boom for the U.S. economy? Because the payments for these loans wouldn't go into the loans. The folks who owe this money now would be relieved of the obligation to have to make payments, allowing them to plan, something else. Now, whether it's just, I can get by a lot easier now, or I can move out of my parents' house and get my own place because I won't have to pay $1,000 a month in payments anymore, or whatever the payments were. Or some of these folks will say, I can get my own car. I can get a car now because my credit limit has just changed completely. I used to owe $60,000 in debt or $150,000 in debt. It's all wiped off. The only debt I have are maybe some credit cards and nothing much else. I can get a car loan. They might go and buy a car. Isn't that good for the economy? Maybe they would be able to, with some help from mom and dad, a little down payment, get a house. They could now afford a payment. Wouldn't that be beneficial for the U.S. economy if a bunch of former college students with college degrees, basically, be relieved of their debts, and especially families with kids who are, paying $300, $500, $800, $1,200, $1,500 a month when the payments are required? You got to wonder about that. I don't know. So let me know your thoughts. By the way, thanks to Wolfgang. Thank you for this donation, buddy. If I had 100 guys like you every day, this job would be easy. I'm writing for the sanctions to calm down and end so I can see how the decision to buy cheap Russian stocks turns out. Hope all is well with everybody. Thank you, Wolfgang. Appreciate that. Keep those cards and letters coming in. Love this stuff. Let's see what's going on there. What else going on? The Dow now is down 39 points when the hour with 57 minutes to go. Rocket Lab is up 4 cents. It's gone green. Turned right around. Gone green. SoFi is now down to 880. Only down to 880 because it was as low as 846. So it's come back 34 cents now. 879. It's only down 33 cents on the day on 48 million. So SoFi might break even today. GameStop's turned around 158.26 up 467, giving you a chance yet again to write 160s against those shares. AMC down 28 cents to 20.92. It's trying to come back. Hycroft Mining down only 0.4 of a penny. I think it's about to go green. Matterport is still at 769. It did hit 733. So we've had a 36-cent comeback since about 12:30 today. We're down 48 cents to 768 on 6.9 million. The Matterport's coming on. Maybe Matterport might break even today. 23andMe is down 16 cents at 361. It bottomed out at 348, the all-time low, 324, by the way. So it got to 348. Now it's 361. So it's about a 13, 14 cent recovery on 2.2 million on ME. Maybe it'll break even today. Spire is 203, down 8 cents. It got down as low as 201. That was right around 10 this morning, right after the opening. So it's only up a couple of pennies from the low of the day. Nothing much yet. ATIP, look at that. It's only down 1.5 cents. ATIP at 183.5 was as low at 2 o'clock. Just in the last hour, it got down to 176. It's come back 7.5 cents. It's down 1.5 cents now on 678,000. Maybe ATIP will go green today. Smart Rent, look at that. It's only down a dime. $4.70. It got down to $4.57 today, which is the new all-time low, right around 10:30 this morning. $4.70. It's come back. 13 cents comeback, only down a dime on 746,000. Maybe Smart Rent will turn green today. Cyxtera is green. Cyxtera has turned the corner. It was as low as 12.26 today, now 12.59, a 33-cent turnaround. It's plus 2 cents on 240. Up, make that plus 3 cents now, 12.60. It's up again. Cyxtera is green, plus 3 cents. Well, look at all that green showing up everywhere. How about that? And of course, while I'm highlighting all that, Rocket Lab decides to back off and now go down a penny on the day. But you know how Rocket Lab is. It sometimes plays with you. It messes with your head, you know. We're down 98 on the Dow. A little pullback again, but boy, that's been a big recovery here on the Dow. Will this recovery add? Will there be more momentum on it, or is this a dead cat bounce? And now we're really going to drop off because the Federal Reserve today released their minutes from their last meeting to justify to clarify their thinking, to give us an idea of what they were thinking with regards to interest rates and reducing their balance sheet. In other words, offloading bonds that they've been buying. They want to get rid of bonds. And the talk now is they seem to be interested in offloading about $95 billion a month of bonds, which, by the way, is not a lot of money. Just in case you're worried that $95 billion is a lot of money. It's not a lot of money anymore. It used to be a lot more money. Back in the 60s, it was unthinkable to think of these kinds of dollars. But $95 billion a month offloading, which is about $22 billion a week, which is like $4 billion a day. That's all it is. We're talking about $4 billion a day of bonds being seeped into the market, into a multi tens of trillions of dollar market. It's huge. So this will slowly let the Fed seep off some of its debt. Now, that's why maybe the Dow isn't so bad off as it was earlier. It looked like it was terrible. Oh, my God, $95 billion of unwinding. Oh, God, what are we going to do with all these bonds? We're just going to buy them. We're going to buy them at lower prices, and that'll have higher yields. That's all we're going to do. The market will absorb these bonds. Not really a big problem. You got to keep in mind something else. Those of you who don't know how this works, and it's all right if you don't know, you don't, unless you're in the business, you really don't know. But let me tell you this. Here's a basic, plain English way to explain something to you. Every week, every day of every week during the markets, new bonds are being created on behalf of lenders. So, on a Tuesday, General Motors might issue $150 million in bonds that they're issuing out because they have $125 million in bonds maturing that have to be paid for on Tuesday. That's the day you pay the $125 billion you borrowed 10 years ago. And you've been paying interest every year on it, but now you got to pay the 125. So what GM does is they've negotiated well in advance with their bankers to issue $150 billion in notes on Tuesday to pay off the notes from 10 years ago from $125 million. And so GM gets another $25 million. Or let's put it this way, GM doesn't get another $25 million. They'll probably get about $15 million because it'll cost them $10 million in fees to get the bonds issued and sold in commissions. And they'll get another $15 million in bonds. And that's enough interest to pay the bond interest on that bond, that $150 million bond. They're going to be able to pay their 3% interest, which is $4.5 million, with the $15 million they got for the next 4 years, 3-4 years. See what I'm getting at? So money is free. Okay. So they put the money in the bank, this extra $15 million, they draw interest on it, 0.5 percentage point. And then they just pay off the loan interest on the new bond they just issued. And then in 10 years, when this bond is due, they borrow $200 million more to replace them. Now, on Tuesday, there might be 15 companies that do this. On Wednesday, there might be 30 companies that do this. And then Friday, and so on. So we're talking about rollovers all the time. Bonds mature all the time, and then bonds get reissued all the time. And the interest rates fluctuate all the time, daily, weekly, monthly, yearly, by the decade. The government of the United States of America comes to the bond market all the time to raise money. And everyone knows when that is, because this is no secret that the American government needs to borrow money from bondholders to pay its bills, because the United States government has a nasty little habit of spending more money of its taxpayers' money than taxpayers actually give it. And that means that the United States government is always running something known as a deficit. And so they're always spending more than they get, and they can't help themselves. And so they have to raise money to get enough money in to cover the bills that Congress keeps authorizing be spent. Even those conservative Republicans who really believe in a balanced budget when they're in opposition, when they become the power of the government, they then spend like drunken sailors. And so it generally tends to happen that during Democratic administrations, deficits go lower, and during Republican administrations, deficits go higher. It started with Ronnie Reagan, and it went into George Bush Sr., then George Bush Jr. really racked it up, and so on. Just saying. So everyone knows that the U.S. government needs to raise money all the time, and the Federal Reserve is sitting on a ton of debt that they've acquired, and they're now going to offload this debt. But keep in mind, the Federal Reserve has earned interest on the debt that they've bought. The Federal Reserve isn't stupid. These guys are pretty sharp. These bankers are using unlimited credit lines of the United States of American people to buy up all this debt. They just print the money. They print cash and put the cash out there and take these bonds off the street, but they collect the interest from all these bonds. So the Federal Reserve is getting interest on the United States government debt that they buy, state debt, municipal debt, corporate debt. And it's not just U.S. debt, it's world debt. They can buy whatever they want, whenever they want. Now they're going to slowly bleed this debt back out. Keep in mind, too, that the debt that the United States government has purchased, they may have bought a General Motors bond 5 years ago, which had 6 years left to live, and then it had to be matured out. And so a year from now, this GM debt that the government's going to offload, sell back into the market, they've collected 5 years of interest on it. They've been paid. And now they're going to give up and sell this bond off, bring the cash back in, and take the money supply out of the money system and reduce the money supply. That's all it is. It's just technical stuff. At the end of the day, it's business. It's nothing personal. It's business. Now, if you forgive student debt, if you say to the students out there, you don't have to make payments anymore on your student debt. The good news is that a bunch of students, millions of them, like 35, 40 million people, won't have payments to make anymore on a portion of debt that they're carrying. This is a good thing. I think this is economically a very good thing for those 40 million. Now, the people that lent them the money, which is the American taxpayer through government programs, they're not so happy because they're going, well, how come they get off not having to pay back any of their debts? And I still have to pay back all my debts, because your debts aren't student debts, you see. You went out and borrowed money to buy a house or bought a car or whatever. These folks went out to buy an education, and now they're being given a break, if that's what it ultimately is. I'm asking whether or not it's a good idea or not, and would it create a boom economy? Could there be a heating up of the U.S. economy if billions of dollars a month weren't going to the federal government to pay off student loans, but the billions of dollars went into the U.S. economy instead? Would it be a good idea if these folks moved into an apartment on their own, bought themselves a new television, got themselves a Costco membership and spent money there, repaired their car, improved their car, traded in their old car, got a newer car? Isn't that better for the economy if the money goes into the economy rather than into the government coffers? Right now, of the 134 of you who have voted on this student debt question, 47% of you think it's good for the economy, and 53% say it's not going to heat the economy up at all. Not going to make a darn bit of difference to the economy. So there you go. I'm kind of wondering, though, don't you think that since 2020, when these loans have not had to be repaid, don't you think that maybe part of the reason that the stock markets hit all-time record highs and that there's a huge demand for services is partially because of the fact that these 40 odd million debtors haven't had to throw money at Uncle Sam? They've been able to spend money elsewhere. Hasn't that added to the economy already? Don't you think that maybe if they have to start paying back the debt, that this money now will be taken out of the US economy and the money will just go into the government coffers, which again is people's money. I mean, it's the American taxpayers' money, but it'll go into a government agency that'll just, knock the debt off and pay its balance loans back to the Treasury, and the U.S. Treasury will then cancel the dollars from existence and lower the money supply. Isn't that shrinking the economy as a whole, though? Because you're taking dollars out of circulation. Have you thought of that? I'm just asking. Maybe I'm wrong. Maybe I don't know what I'm talking about. I'm just kind of curious what you're thinking about. Anyway, there it is. Thank you all for being here. The Dow right now is down 61 points. Now it's down 76, just dropped 15 points. We're way better than we were. I'll say that. Rocket Lab is even again, 820. SoFi is 876, only down 35 cents. GameStop 156.72, up 156.42, up 283. AMC is down 49 cents. Highcraft Mining down about 1 penny. Matterport, it's down 59 to 758. ME is down 18 cents to 359. Spire Global down 8 cents to 203. ATIP down 3 cents, 182. Smart Rent down 9.5 cents to 471. Cyxtera down 6 cents to 1251. Pfizer is defying all the logic. It's up 153 today. 52.78. Pfizer's having a great day. Those of you out there that have Pfizer options, you're always looking for opportunities to do rollovers where you can move up your strike price and move down the line in time. But you have all the time in the world to do it whenever you're ready to do it. Keep your eye on your premiums and look for better premiums. Robinhood is $12.48, down 55 cents, coming back a bit, but still down 55. Vanek Vectors is only down $3.44 to $254.79. It was down to $249.99 today. We're up almost $4.80 here from the low of the day, so there's a recovery there. Home Depot, $298 a share, got down to $295 today. Now $298, still down $6.51. IBM is up 37 cents. It's gone green. Microsoft, well, it got as low as $296 today. A little further than I thought it was going to drop. It's now at $301. This was $315 day before yesterday. So we've dropped almost $19 a share in middle of two trading days. In the middle of two trading days. We haven't finished the second one. It's quite something on the Microsoft. Apple down 238 now, 172.68. It hit a low at 11 o'clock at 170.13. Got quite low there for a while. Goldman down 621 at 317.75. The low 316, the high of 320. We're not moving much today. We're just down on it. Cisco down 39 cents, a little recovery there. Facebook is still down 768 at 224. It got down to 221 at one point. Over at Amazon, we're down $93. Actually, we're now down 90 to $3,190 a share. The low today, $31.46. This is a $44 recovery. $44 comeback, still down $90 to $91 on Amazon. On Tesla, we're down $37 to $1,053. We were as low as $1,027. And on Google, we're down $66 right now at $27.54. We were down to $27.28. So we've come back about $26 from the low of the day. We're still down $66. So lots of red still to be chewed through here with 40 minutes to go. I don't know if the market can eat it all up. We're still down, unfortunately, on NASDAQ, 1.85%. 263 points. That's a ways down. The Dow Jones is now down 114 points, it looks like. Yep, 115 lower. So we may not break even if the Nasdaq doesn't turn it around and S&P stays kind of where it's at, which is down 0.8 of a percentage point. The market will not have an up recovery today. It'll chew off a lot of the losses, but then again, we might eat them all back. We might get them all back. I don't know. The Dow is down 118, 112. We were down closer to 400. I don't know if there's a 300-point drop coming on the Dow in the last 40 minutes. It's certainly possible, but I don't know if it's going to happen. We're down 130 on the Dow now, 41 on S&P, and 280 on NASDAQ. Have you seen oil? We're down $4.69 a barrel to 97.27. We are actually down to 96 a barrel today. We were down closer to $6 a barrel about a half an hour, 45 minutes ago on oil. So we've had a real drop off on the crude price. The only reason I can guess that oil backed off is because the gutless Europeans, and that's what they are, gutless, they will not put on sanctions on Russia that will hurt them as badly as it could, to make a point that there shouldn't be war crimes. In other words, there is not an unlimited price that the Europeans are prepared to pay to punish Russia for slaughtering innocent Ukrainians. They're not cutting off gas sales and oil sales yet. And because oil is still flowing out of Russia to Europe, which allows Russia to fund their army, we will have the status quo continue, and oil will drop in price because there's no shortage of oil in Europe. There's no gas lines in Germany or France or Italy or Austria or Switzerland. There's no gas line. There's certainly no shortage of oil in the United States or Canada. We are drowning in this stuff. We are drowning in the amount of oil that we are bringing out from the ground. And the United States government is offering 1 million barrels a day of strategic reserves of oil to add to the glut of oil that is out there domestically. And so West Texas, $97 a barrel because the refineries have nowhere to put it. We aren't burning enough of it. We aren't polluting the air enough to get this oil all chewed up. So there you go. That's the story of a lovely lady and her lovely children of her own. We're down 149 on the Dow Jones. We are backing off again. And now the focus of attention on the stock market was exactly where it was before we opened this morning. Interest rates. The Federal Reserve is making it all who want to follow the notes of the Fed that they are going to jack up rates by probably a half a point for several months in a row. We could well be in the 2 to 2.5% interest rate neighborhood, Federal Reserve rate, by the end of this year, which means consumer loans and mortgages in particular, mortgages could reach 5.5 to 6% by next year. That is the kind of number that will make people go, whoa, whoa, we're not going to buy that house. We're not getting a way bigger house for $200,000 more money. Because if we've got to borrow $150,000 more at 6%, whoa. No, I don't think I want to do that. So that's where the economy goes like that. That is a hard landing. That's bad. That's really bad. Hard landings are not good for the stock market, investors, and the economy as a whole. But hard landings and so-so stock markets are wonderful for option writers. Those who write options can get through tough times like a hard landing rather easily by being option writers. The premiums just keep on coming and keep it on coming because there are always gamblers looking for the long shot lottery ticket, dying to hit the big one. They buy during recessions. They buy lottery tickets during boom times. They're always buying lottery tickets. So you who are writing options, following me on this channel, you're going to have a field day this year. You're going to have a wonderful time this year because you do not have to fear the upside on the markets. There is not going to be an upside on the markets. I've said it before, and I'm going to say it again. If you learn how to write options, You're going to make money this year. You're going to make money from your portfolio. You're going to make your portfolio work for you, and it will more than offset any losses that you're going to see in the markets themselves. The bad news is the former SPACs that we have here are not running the $25 each right away. That's not going to happen. So we're going to have to take a look on, some of you are doing the hard look right now. Are you going to write $10 call options against Rocket Lab? Or are you going to do $10 call options on SoFi for, say, 3 months, 4 months? Are you going to take premiums off of these stocks to either average down on them or to buy other stocks that you can write options against as well? You're going to have to ask yourself, do you want to do that? The premiums may not be that great, but on the other hand, if you've got 1,000 shares of SoFi and you can write 10 calls and get 50 cents a call, that's $500. If you use that $500 to pick up another bunch of stock on whatever you're following, or you pick up an in-the-money call option, you add that to some other cash to buy an in-the-money call option on another stock to write options there. Maybe you can use some of your SPAC shares to raise some cash to buy in-the-money calls to write more call options against them. Maybe it's Cisco. Maybe it's Pfizer. Maybe it's Apple. Maybe it's Microsoft. Whatever capital you have. You have to take a look at it yourself. We're down 184 on the Dow. We are definitely backing off from that 30-point drop that we had when I started the show. We're now down to 184 negative. The Nasdaq is down 2.2% and falling. It's down 314 points. S&P down 1%, down 48 points and backing off. So the markets are dropping again, coming into the last 34 minutes of the day. The Dow now down 186, 189, pushing a 200-point drop right here, right now. The Dow just hit 200. So can the Dow be off 400? Yep. The Dow could be off 400 between now and the end of the day. Could it be off 500? Yep. Yeah, sure can. 300-point drop on this index. It's only down a half a percentage point. At a 200-point loss, that's a half a point. I mean, this is a nothing burger. The Dow can lose 3 percentage points in an hour. It's a question of does it want to? And that's what we have to watch for. We'll keep an eye on that. GameStop still hanging around 155.69, up $2.10. It has been reluctant today to give up more ground. That's kind of a good thing in a way if you're shareholder of the company and you're an option writer. Yeah, if you've written 160s that die this Friday or next Friday, stock isn't going anywhere, so you're still going to make money. It just would be a lot nicer if it would drop $15 today and give us another quick hit. We love those daily trades on option writing. But as an option writer, those of you who've written 170s, 175s, 80s, 85s, 190s, 200s, all the way up, you are loving life because these shares are just sitting here and these contracts are grinding down, and that little sand clock, the sand is draining out of the contract's life because time is its killer, ultimate killer. And you're going to be rewarded. The good news is that this week we have 2 days to go after today, and next week we only have a 4-day week for trading. We're closed next Friday, so contracts are evaporating between this Friday and next Friday rather dramatically and quickly. And a bunch of you have contracts that are expiring this Friday and next Friday. Can GameStop drop $10 between now and the close? Yep, it could. Will it? I'm not so sure. Volume on this thing, 3.69 million. But if the Dow wants to keep giving it up and, accelerate its losses, we're down 227 on the Dow. And if the losses over at the NASDAQ and S&P want to accelerate into the last half hour, then GameStop could give up $5, $7, $10 a share in the next 30 minutes. AMC is off 80 cents. It tried a couple of times today to break even and go higher. It couldn't do it. The latest rally fizzled out about right around 3 o'clock, just when I started at 3:03. We're at 20.93. We were very close, 20 cents away from breaking even. And now it has given up 50 cents in the last 10 minutes, 15 minutes. AMC now down 81 to 20.40. It does not look like it's going to have an update today. No recovery coming that direction. On the Haycroft Mining, 206.8 cents right now, down 3.2 cents on 22 million shares. This thing was trading 350 million a day last week. It's now 22 2 million today with 30 minutes to go. There is no volume. AMC volume, 49 million, way down. GameStop volume, as I said, 3.7 million, 155.23 last trade, down a dollar, up $1.64, and only up $1.64. SoFi 872 down 40, Rocket Lab down 4 cents to 816. The Dow's down 232 and falling. Matterport 754 down 63 cents. ME down 20 cents. Spire down 9.5 to 201. ATIP down 4 to 181. Smart Rent down 9.5. Sextera now negative 14 cents, going negative again. Vanik dropping, just dropped a couple of bucks to now down 5.15. Home Depot dropping a couple more dollars to 7.54 lower. IBM coming back to the flat line, might go red. Microsoft now $11 lower again. It has turned red. Apple has turned red again. Both these stocks are falling, as is Goldman Sachs, Cisco, Facebook. They're all showing a cliff. They're all heading lower right now. Amazon down 104. Tesla down 42, Google down 80. All stocks are dropping right now on the heavy growth-laden NASDAQ index. They're all backing off. And that's what we got today, and that's what's happening. 154.93 on GameStop. The 155 level seems to have been breached, up $1.34 at the moment. The low of the day on GameStop, 149.70, and the high 159.29. So we're just about in the middle, just slightly ahead of the midpoint of the trading range for GameStop, as the market seems to be backing off coming into the last half hour or so. There you go, guys. That's the dealio. Those of you who are looking for a profit on writing options, the stocks are heading the direction you need. They're flat or they're lower, and time is marching on. This week is down to 2 days. So learn how to write options and take advantage of this market. I just see that for the foreseeable future, knowing that interest rates are going up 0.5 point for the next Fed meeting, and the Fed now reducing their bond exposure, the corporate America, corporate Canada, corporate UK, Germany, and Europe, the tall odds, those are the odds of them making more money per share than thought, now is not there anymore. It looks much more difficult. I'm not saying that we're going into a recession, like a massive pullback, but what we're not seeing is the massive growth curve that we were getting coming out of the lockdown. That has come and gone, and I see the Fed tightening. I suspect that the European Central Bank is going to follow the Fed to some degree, and that is going to put more pressure on economies. They're not going to be able to generate the kind of revenues with fewer dollars in the money supply. And of course, with Russia being the problem child, the Europeans have put sanctions on the Russians, but not enough yet to choke them off. And Russia may well have a 20% drop in its economy. That will be, pretty bad. That won't help other economies that depend on Russia for business. And so business will have to be done elsewhere. And so there's a slowdown coming, certainly in Europe, without a doubt. There will be a slowdown in the economy in Europe. That will reflect back to us to a degree, because a certain percentage of North America's economy relies on a strong European continent to do business. And we're going to see less of that for a while. All right, there you have it. 24 minutes to go, 26 minutes to go. And then we're done. And we'll see what's going on. Good afternoon, everybody. Welcome to the show. I'm glad you're here. 155.28 right now on GameStop, up $1.70 a share. The Dow off 227 points. Rocket Lab down 7 cents. SoFi down 40. And there it is. It's a sea of red. Other than GameStop, it's just a sea of red. Pfizer is another one that's holding a 146 gain. IBM is only up a dime. I don't see much else green. Target up a quarter. Costco, interestingly enough, is up 8.67. I don't know why Costco is having such a good day. Walmart up 328. Perhaps the thinking is that if the economy is going to slow down its growth, that people will hone in their money and they'll only spend at Walmart and Costco for the basics, and they won't spend at the higher end retailers. Maybe that's where these two are getting some kind of a bump. Nvidia off 1587 to 243. That is taking another hit here. Nvidia now in the last, wow, and within the last 2 weeks, it was at 287. Just heck, that was on March 29th. It was at 287. Here we are, April the 6th. It's 243. So it's really taken a hit. In the last 6 months, Nvidia was 315 on November 26th. Now 243. That's a serious pullback in the last 5 months. And in the last year, that would have been the high, I guess. 326. The 52-week high, $346. We're at 243, $100 down on Nvidia from its 52-week high. This is a company making money hand over fist. These guys cannot keep up with orders, and their stock's off $100 a share. To show you, even high-flying, money-making stocks are getting whacked. That is why SPACs, like our former SPACs, also have been suffering, because they're growing, yes, but they're not yet profitable. Our small companies were SPACs, are now publicly traded companies, are quickly ramping up their numbers, and they're quickly whittling away their losses. They're going to turn the corner. But even Nvidia, that has turned its corner years ago and is now growing out, the problem with Nvidia is that it's trading at 63 times earnings even now at these prices, which are $100 a share below their highs. So this was a $90 PE multiple stock, is now a 60 PE multiple stock, and in the world of higher interest rates, 63 doesn't cut it anymore. This one might have to go down to 40 or 45. Now, there's two ways for Nvidia to go to 45 times PE multiple. Either the stock drops another 50, 60 bucks a share, or they earn way more money next quarter than last quarter to show that their earnings are growing, and that's why the PE multiple is dropping. It's probably going to be a combination of the two, and likely has been for a while, as Nvidia has backed off as their earnings have come on. The problem now, though, is in the world of Nvidia and in the world of other stocks with higher PE multiples, because of supply chain problems and because of factory shutdowns in China, remember China? We've got issues where these guys cannot get their merchandise or their parts and their orders completed in an orderly fashion. So the second quarter deliveries of finished goods, or the third quarter expectations and so on, will have to be revised downward. And this means, of course, that the companies will be admitting to their followers in Wall Street that, yeah, look, we got trillions of dollars, all of us together, trillions of dollars in orders, certain companies, billions. The problem is we can't get the product in, like we can't get the raw materials in, or certain parts aren't coming, so we can't complete fixing or finishing or building the widget that we're famous for. And we can't bill the customer for the widgets because we didn't deliver. We're back ordered. That's the good news. They didn't cancel their order. The problem is that we're behind in getting the widget out the door. We're going as fast as we can. We're trying to get supply chains fixed, but it's not up to us. We're dealing with 10 different countries, 50 different suppliers, whatever complicated machinery is being made, and we're not delivering the expected volume of goods that we thought we would deliver. It's all going to be down the line. That's not good for the stock today. That's bad news for today's stock market. And that's what we're getting at here. The realization of this market is beginning to sink in that, yeah, the demand might be there for Whirlpool dishwashers. The demand is there for Ford F-150 pickup trucks. The demand is there for Apple smartphone, Apple iPhones, or big-ass iPads. But if the company can't assemble and ship and deliver the goods to paying customers on time, you're going to have to book the sales in the next quarter, which means that this quarter you're going to miss booking sales. And your stock is trading at such a high PE multiple on Perfection, economic perfection. Your stock price is priced to perfection. And if you miss by half a percentage point your gross per share sales number and your earnings number and your revenue number, you miss by fractions of a percentage point or more, your stock will get crushed. And that's what's been happening from time to time when we talk about why is the company so-and-so making all this money and the stock went down 10%. Why is their stock down 10%? They're making all this money because the forecast for the next quarter and the next quarter is suspect. The analysts don't believe it. They think that there's trouble in River City. And we have a new problem that's surfaced in the last 6-8 months, inflation, and now higher interest rates. And there are times where higher interest rates don't affect a company itself, but it gets whacked anyway as far as its stock is concerned. Why? Because the product that the company produces, while they don't need to borrow money to produce their product, they can't get their product sold in the final end to the volume they'd want because their customers need to borrow money to buy their product from them. And that's the F-150 story. If car loans are going to go up from 0% financing, 0.99%, 1.5%, 2.9% financing, if car loans are going to now become 4, 6, and 8% loans over 4, 6, or 8 years, you got to pay 8% interest for 8 years. This is going to make people order lower priced vehicles. This will hold people back 6 months before they make the commitment, or a year, or a year and a half. It's all a slow moving, slight adjustment to the alignment of where the ship is going. These are giant ocean liners of consumers who will slow the ship down, veer it off to one side, and that screws up all the forecasts. And this is where car company stocks get whacked along with all of the suppliers to the car companies. Think about tire manufacturers. If the Jeep Cherokee the unlimited version of that vehicle gets cut back 10% in sales, and the Dodge Ram loaded pickup truck is held up with sales, you're talking about 5 tires for every vehicle. You got 4 on the road and a spare. That means 5 tires for every car or truck not being delivered is not required by the car companies as a whole. You multiply 1 million cars, light cars, vehicles, and trucks not being required next year, that's 5 million tires that are not required to be delivered. Who is manufacturing those tires? You just know that those factories, those companies, some of which are public companies, are not going to make their quarterly financials. You don't require 1 million vehicles in the next year or so. That's 4 million disc brakes not required for all the disc brake manufacturers. And don't forget, once you sell a car, a truck, whatever, a van, now you have those tires on the road that have to be replaced every so many thousand miles. Brakes have to be redone every so many thousand miles. If you don't have 1 million cars going out this year that you thought was going out this year, you're not going to have brake jobs in the next 18 months to 2 years needed to be done as high as before. You're not going to have tire replacements. You certainly don't need winter and summer tires for all those vehicles anymore. We're talking about a lingering, ongoing problem that just goes down the line everywhere you can go. And this is why the auto industry used to be the big deal in the United States and Canada, because as goes the auto sector, goes everything else, right down to housing sales, right down to a pack of smokes, right down to Vegas numbers, people hanging out in Vegas and enjoying themselves. We're talking layoffs, we're talking cutbacks, we're talking slowdowns. And interest rates, higher they go, the economy slows up. I'm Mr. Happy today, aren't I? We're down 162 on the Dow right now. We're down 44 on the S&P, and we're down 296 on NASDAQ. The NASDAQ's down 2.09%. And we're backing off. Now, Gamestop is 156.42 with now 16 minutes left in the day. We're up 282 on Gamestop at 156.42 right now. SoFi holding at 877, Rocket Lab holding at 810. We got Matterport at 762, still down 55 cents. AMC down 79 cents, and Haycroft Mining down 5.5. ME down 21 cents. Spire down 7. ATIP is still down 3. Smart Rent down 2.5. Cyxtera down 15 cents. Pfizer defying the odds, up 161 today. Robinhood at 12.56, down 47 cents. Vanik down 4.41. Home Depot down $6. IBM up 20. Microsoft down 10.60. Apple down 2.83. Slight recoveries here and there, but ever so slight. Not a big turnaround at all. The Dow down 154 right now for the index on the day. And oil down $5.10 to 96.86. There you have it. Oil were to go down to 55 or 60 bucks a barrel, we would probably be breathing a sigh of relief at the economists' table. The estimators, they'd be going, well, if oil drops 30 bucks a barrel and crude starts selling in the United States for between 180 and 250 a gallon again, we get gasoline down there. The truckers out there are not going to be paying $4 and $5 for diesel. They're going to be down to 3 something, the low 3s, the high 2s for diesel fuel. This would be huge. The airlines will really turn on some profits. Cruise lines will their profits will really come back because their cost of fuel will be dropping by almost half. FedEx and Amazon's profits would surge. Absolutely go higher. Any company in the delivery business will make a ton more money. Inflation pressures would drop because cost of groceries to get them to the store would drop. Goods and services costs would all drop. It would be a very good thing. Travel would pick up. Hotel occupancy would probably rise. The only folks hurting would be the folks in Oklahoma, Texas, and other oil-producing states. They'd be the hurter. Folks hurting. Here in Canada, Alberta, they'd be crying because oil at that level isn't as lucrative as it is now. But I don't see oil going to 55, 60 bucks a barrel. That's the catch. I see too many forces out there against that kind of a thing. So unfortunately, I don't see oil helping us all that much right now, which means inflationary pressures will persist. Rates will have to be raised. The economy will have to be bludgeoned down and calmed down the hard way. And there it is. There's the story of what we're dealing with right now, I think. Anyway, there it is. I don't know. What can I say? It is just what it is. It's just what it is. It's just what it is. Option writers, unite. You're going to do just fine. Option writing is the way to go. If this economy doesn't want to give you big, fat, juicy profits, stocks will be flatlined. They'll drift a little lower. You'll write calls. You'll write calls. You'll write calls. You'll write calls. And every Friday is payday because you'll have calls expiring every Friday. Every week, you're going to be writing calls every 2 weeks, 3 weeks, and they're going to be just drifting lower and lower and lower, and you're going to be cashing in the reserves and saying, thank you, may I have another? Thank you, may I have another? And instead of watching your stock flatline like an apple for a while, you can still bring in 5%, 7%, 10% a month on your investment. Have it haul in. You've got 50, 60,000 at work on Apple in deep into money calls. You're bringing in 5, 6, 7,000 a month in premiums. Can you live on that? Probably. You can probably cash flow your way to existence just on 60, 70,000 of investing right there. You don't need $1 million in the bank to be able to retire. You can be self-employed or be self-employed, in other words. There you have it. 157.14 GameStop up 355, defying Mother Nature. Doesn't want to go down. Look at the Dow. We just came back 70 points, 80 points. We're down 76 points on the Dow. Just had a surge yet again on the market. The Nasdaq is down 254, still down 1.79%. S&P down 32, which is 0.7%. The Dow is down 0.25 percentage point. And the reason the Dow outperforms everyone else is because the Dow 30 is made up of 30 stocks, a bunch of which pay dividends. And so that's one way to compensate for a slowing economy. You own stocks that pay you a dividend to hang on to them because they can afford to pay you every quarter so much money per share to give you a reward for being a patient owner of the company. I'm saying be an impatient owner of the company on top of that. Get yourself some IBM deep in the money options and write calls against it and make even more than the dividend pays you. And away you are. There it is. Thank you, everybody. Nice to have you here. What can I say? We're just, we're just doing what we're doing. Michael's saying, I had a couple stocks I bought a little high, but these last 2 days I averaged down quite a bit. The future's so bright, I got to wear shades. There you go. Here we go. Credit Savage, love nice red days like today. My bears and I come out and play and fill our honey pots. And yes, Uncle Bruce, thank you. Can I have another? No bank will give me 41% return on investment on my 12 Matterport shares. No bank will give me that. Well, there you go. There you go. What can I say? Austin, I find myself getting tired earlier and earlier. Might be time to get back on the treadmill. Well, you gotta figure out the way you're going to make money in this market. You're either going to just buy and hold. You're going to, buy and flip. You're going to buy, hold, and write call options. You're going to put up cash and write cash secured puts if you want to try that game. There's all kinds of ways to play this one. I like the idea of making money from options because you're the casino and you're the building, and being the building is the guy you want to be in Vegas. I think. Just my thought and my feeling on it. 156.19 on GameStop right now. 156.19, still up $2, 280, something like that. The Dow down 108. We have 9 minutes to go before we shut down for the day here. Trying to get through this wacky day. The Federal Reserve, the Fed, has released its minutes. We're through that now. Okay, we can now get back to regular life, back to your regular scheduled programming. Everybody, we'll see how it all wants to work out, and hopefully we'll be okay. There you go. Now join me tonight. Don't forget, 8 o'clock this evening Eastern time. I'll be on the air. For Gold Bagel members right here, if you're one of those guys, I'm on tonight, 8 o'clock, prime time with Uncle Bruce. If you have any questions on contracts, trading strategies, let me know. We'll cover all that tonight. Hang out and see what's going on. Ask me whatever you want. And we'll have a chat. Chris Evans says, I didn't mean 12 Matterport shares. I meant 12 Matterport contracts. Sold a month ago at $125 per contract. Just bought back at 57 cents, all in a month's honest work. So $1,500 came in and $600 something went out, and it kept the change. Nice going. Not a bad move there. What else is going on here? A sign is saying facts from Scandinavia. The Norwegian government expected to receive $277 billion in revenue from the petroleum activities this year, but they could be 6 times as high, $1.75 billion instead of $277 billion. I know that the government of Alberta, here where we are, they were calling on this year's budget for a $500 million surplus versus a deficit last year, I think was $4 billion when it was supposed to be $12 billion or $8 billion. So it went from 8 to 4. Now they're thinking a $500 million surplus. The analysts out there who actually know what they're talking about, because government officials haven't got a clue, and they're going to undercut it. They're going to sandbag it. But analysts are saying that based on petroleum prices between 90 and 120 a barrel for West Texas, Alberta is going to run a surplus of up to $10 billion this year, 20 times what the politicians were thinking. Now, wouldn't you know it, there's an election coming up in the next year. Wow, what a surprise. They're going to come out with this massive surplus and a massive amount of government spending just in time to call an election, time to put us back in power for 4 more years. So get ready, kids, for all kinds of fun and merriment and all that kind of stuff. Let's see. What else is going on here? Yeah, not dollars, Norwegian kronas. I hear you. Now, tell me, what is 1.75 billion Norwegian kronas? How much is that in dollars? I'm just kind of curious. I know that Alberta is generating much more money than Norway is from oil. because Alberta has much more oil than Norway does. But way to go, Norway. Well done over there. Fun fact, new circular economies are being forged. The longer you can invest early in graphene batteries, in Canada Electric jets, and lithium nooks and cranny investments. There you go. There could be all kinds of upside on battery investments. You just have to want to be into it. Of course, investing in power companies that have solar and wind power, there's opportunities there. The heat is on, the drive is on to go to solar, go to wind power. Hydro, of course, is still and always will be, where you want to be. But producing power from burning oil, not a good idea. Not good for the economy, not good for the environment, actually. Kind of bad. Anyway, there you go. We'll see what's going on here. 155.80 now on GameStop, up 221. 155.45, up 223. We have 5 minutes left to go in the day. We're down 142 on the Dow. We're down 43 on S&P. We're down 309 on NASDAQ. There was a little recovery, and it dropped, and we're going negative again. But the Dow Jones is not near its low of the day. The low was 34,277. We're at 34,493. So we've added 220 points to the Dow since the low of the day, 2 o'clock Eastern time today. And it doesn't look like we want to quite go back to that level on the Dow Jones. Still, we're down 155 on the Dow. It did reach the high of 609, 34,609 about an hour ago. But we've now given up 130 points from that high level so far in that hour. Okay, we're down 155 on the Dow right now with 4 minutes left in the day. GameStop 155.66, up $2.07, going absolutely nowhere. We'll see tomorrow if we can hold the line, or will it drop some more. Time will tell. AMC $20.39, down 82 cents. The low on AMC today, 20.01. That was at about 2 o'clock, noon, 1 o'clock. It's hit that level a couple of times. 20.38 right now on AMC. Down to 3 minutes, everybody. There it is. What can I say? Thank you all so much. 1 billion kronas is 1 zillion billion Russian rubles. Thank you for that info. $1 is about 9 kronas. So, 900 or 9 billion kronas is $1 billion. So, if it's just under 2 billion, divided by about 9 to get the dollars. So we're talking $250 million, more money than thought. Norway doesn't have 150 million people. It's got, 4 or 5 million people? That's a lot of money for a small number of people. Pretty good. That's good for the economy, good for the country. And, of course, Norway, I believe, has a massive heritage fund. They have a massive fund that they put the money into, a sovereign fund, and it generates a big chunk of government spending, which is fantastic. So there you go. What can we say? Where are we at now? We're down 109 on the Dow with 2 minutes to go. Welcome, everyone, to the final minutes of the day. It's nice to see you. I see you here. I'm noticing that the 10-year Treasury rate has climbed to approximately a 3-year high. The interest rate on a 10-year Treasury right now is showing 2.61%, having hit a high today of 2.63%, 2.65%. It's been a while since the U.S. 10-year has been up to that level. The rate in the United Kingdom is around 1.4%. Was hanging around this 1.74% earlier today, so something's happening in the UK. I don't know what. We've got Italy up here as well at 2.3% interest. German rates for a 10-year note are now at about 0.65 of a percentage point, 2/3 of 1%. The American is 2.6. So American taxpayers are paying far higher interest rates to borrow money than German taxpayers are. But that's because Germany runs a surplus, and these bonds, they don't really need the money to pay bills. So they're just kind of offering notes for pension funds to earn money on as a courtesy. We're American. The American government is issuing notes because they need the money. That's the bottom line over there. Anyway, we're just about shut down here. We're about finished for the day. The last minute going on here. My poll question: if the U.S. government were to forgive student loans, would the U.S. economy heat up? If all federal student loans were forgiven, 51% of you say, yeah, it would heat up. 49% are saying, I don't think it would. 255 votes have come in on this poll question. Thank you all for giving that a shot. I do appreciate it. We are just about finished here. I think we're done for the day. The 2 o'clock mark, 4 o'clock Eastern mark has been hit. And I think we're finished on our trading for today. Thank you, everybody, for being here today and hanging out. The GameStop closed at 156.41 or so, up 282. The Dow down 143.95, I guess. Rocket Lab was green around 3 o'clock, but it couldn't hold it, down 14 cents on the day. SoFi 875, down 37 cents. Down 82 on AMC. Matterport 761, down 56 cents. ME 358, down 20. Spire 204, down 7 cents. ATIP down 3 cents to 182. SmartRent lost half a penny, $4.80 and a half. SmartRent was as low today as 457, a new all-time low. Closed at 480, almost unchanged. 1.2 million volume on SmartRent. Cyxtera 1249, down 8 cents. Over at Pfizer 52.87, up $1.63 a share. Robinhood 1251, down 52. Bannock down 534. Home Depot down 637. IBM eked out a 48-cent gain. Microsoft down 11.38. Apple down 3.23. Goldman down 7.66. Cisco down 55. Facebook down 8.50. Amazon down $106. Tesla down 45. Google down 77. Bed Bath Beyond down 16 cents. BlackBerry down 20. Royal Caribbean down $3.14 to 80.13. Target up 116. Costco up 9.47. Walmart up 3.52. They all gained today, trying to go the other direction. There is the market. There is what we were looking at today. We're done for the day, and we'll see how it goes tomorrow. Thank you, everybody. Splurk, thank you, buddy, for being here. Appreciate it. 99 Nation videos, thank you. Munamo, thank you, and thank you for the thumbs ups, everybody. That if you're able to hit the thumbs up button for me today, I do appreciate it. We are doing the best we can with what we got. This market is a downer today. Nothing bloodbath-like, but it was a down day today. And that is that. We'll see how it works out tomorrow. See if the market wants to come back with a little rebound. It might do that. Now that the Fed minutes are out of the way, we may have an update tomorrow on the markets. We'll see what it does. And those of you who are writing options, another day closer to expiry today and tomorrow. We'll see what happens then. In the meantime, stay safe, stay healthy, stay well, and behave yourselves. I'll try and do the same thing. We'll catch up with you tomorrow morning right here. And if you're around tonight at 8 o'clock, come on in to this channel. I'm going to load up that show right now. 8 o'clock tonight, prime time with Uncle Bruce for Gold Bagel members. Would love to have you join me. And I'll look forward to seeing those of you who will catch up with me tonight. And then the rest of you, we'll see you tomorrow. We'll see if we can make some more money in this wild and wacky stock market. In the meantime, take care, everybody, and thanks for being here. All the best. See you soon. Bye for now.